Yo, GM. We're back. We are back after a hiatus from the live streaming. Let me get rid of this banner. There we go. What is up, everybody? Just trying to, so I'm sure you saw YouTube puts in a review process when you want to go live for the first time, since I'm using my new YouTube channel, youtube.com/@nighttherapture. So that's under review. It's supposed to be unlocked sometime today, but rather than postpone, we've gone live, and I will post the recording to YouTube afterwards, after the show is done. But we're here live on X, where all of the crypto activity happens and takes place regardless. So I'm just trying to figure out how I can view chat from X or on Twitter. I'm just trying to see where I can see that, where I can see comments in chat. And I don't really see yet. Oh, there we go. Okay. Got it open. Sorry, just type in a few things. For anyone that is viewing live right now with me here on X, how is the mic volume? Is the mic volume good? Do I need to make any adjustments before we get underway? Let me know, and I will adjust accordingly. It's been a minute, guys. When was the last stream? I don't even remember. Probably back in like June, maybe July, maybe even May. It's been a long fucking time. I do apologize. Life took me on a bit of a journey over the last year, where I removed myself from my previous routine and sort of went back to the ground floor to rebuild things in life. But we are back and better than ever. And it is good to be back. I'm going to turn the music off now. There we go. Music is off. Well, I want to welcome you to Rapture's Scalp and Swing Sessions, live perps trading and analysis. This is a new format for the show. Over the last year, I really went back to the drawing board and went back to build my process and my approach from the ground up. Really from the foundations all the way, the ground floor foundations to really tight execution and everything in between. I went on a journey of relearning, learning things that I knew from before, learning new things so that I could improve my process and my execution, and ultimately my outcomes. And it was a long year, but a very rewarding year. I went and looked at every component or every angle of trading. For anyone that's been with me on this journey for a while, you will know that I was mostly focused on trenching and shitcoins. And my old tagline was, I'll chart any shitcoin with a pulse. For anyone that's been with me for a while, you might remember that one. Well, my roots were in perps. That's where I first started learning how to trade back in early 2022, maybe late 2021 was when I made the decision that I wanted to learn how to trade. But it's been a journey. Like when they tell you you need to take a few years of just figuring things out before you even get to a sustainable or consistent level, they are not kidding. And that's been my journey. But I returned to perps back in, I think, February of last year after the great meme coin massacre post Trump and Melania coins. And just on chain just didn't feel great. I didn't want to be a part of that, a part of trenching anymore. It didn't really fit my life or my goals or my outcomes. So I went back to perps where it's a more controlled environment. Like trading, there's very little control you can have in trading or in life in general, to be honest with you. But that's especially true for on-chain, right? Like you're at the whim of any number of different external factors, right? Whereas with perps, it's more focused on your read of price, and you can control your risk parameters. You control your sizing in a more systematic way, and it gives you more of a it allows you more time to plan out your potential trades, right? Like you can't just be dogmatic about your approach and be like, it has to give me this and this is what it's going to be. No, it's a bunch of if this, then that's, as we talk about. For anyone that's joining from the Telegram channel, Rapture's trade book, which you can find a link to in my bio here on X. But anyone that's with me from there will know that I often say, we're waiting to see certain things happen when we approach levels. We're waiting for the different interactions. And it's if this happens, then that, right? If this happens, then I will take this trade. If not, then I will wait for the next if this to happen. And that's the best way to approach trading, right? You can't go into it pig-headed and just say, it's my way or the highway. This is how it's going to be. I'm only thinking this is going to happen. No, you have to be fluid. And you have to have a basket of conditions that you look for that get you on board of a trade and get you to be able to have a solid read on price. Like I'm a price action trader. Over the last year, I went down a few different paths in trading. I got really interested in order flow and auction market theory over the summer. And I went down that rabbit hole, and that rabbit hole is deep. And you can be very successful using that stuff, like market profile, TPO charts, volume profile, VWAPs, all that stuff, poor highs, poor low, the inefficiencies, like that whole approach to trading. I know guys that crush it doing that. But I found for me, it was overcomplicating something that I was already good at doing, which is understanding my trading range, understanding bias and market structure and levels. And I just found that it was adding an extra layer of complication when you want to keep things as streamlined as possible. Yes, you want to have as much data or information at your time of execution to get a solid trade so that you have a solid read. But I just found that was overcomplicating everything for me. But that was a part of my journey, right? Like I went down that path to see if I could find a few elements that could enhance my execution. And I've kept a few little pieces here and there, and I like to call it order flow light, right? Like I'm just curious about certain things once certain levels happen, or if there's a big market-wide event. I want to know which side of the market is controlling things. Is it a spot driven move, or is it a perps driven move? Or when I'm trading low time frames, like as I've spoken about in the TG quite often recently, is I've focused more on intraday and low time frame trades. Even before that, I was a big fan of showing up for my session, taking my trades, doing my work, right? Like it's my job. I treat it as such, as my profession. Taking my trades. Oh, what up, JJ? I see JJ in the chat. Gee, on buddy. Taking my trades and closing out when I'm done for the day and being done. Now, that's one thing I really appreciate about Perps versus compared to on chain, right? Like when you're trenching, it's 24/7. If you're not active in the market, you feel like you're missing something, and you feel like you're missing the next opportunity or the day's runner. It's a completely different lifestyle focused on Perps, where you can show up within whatever hours it is that you want to define as your trading window, and you can have the patience to find your setups and take your trades and close out for the day and make consistent income that way, rather than that whole grinding lifestyle, which is great for people that love the trenches. I'm not taking anything away from that. I just got to a point in my life where that was no longer aligned with how I wanted my life to be. So back to what I was talking about with the order flow light, right? Like you want to have data at your time of trading. So I have taken some components of that, but I've really gotten back to being a price action purist for the most part. And I really went and refined what that means for me over the last year and how I can make that work best for me. And a big focus over the last year has been on process, right? Like before, I would say a year or two ago, while my read on price was really good, especially for high time frame setups, what wasn't aligned was the me element in the trading, because I didn't have a process. I just, I would outline my boxes or my lines, but I didn't really have a process for what or how to get on board those trades once price got into those areas, or how to manage my own the human element, right? And that's a big part of trading. Probably one of the hardest components to get a handle on. And that takes time. And that's a lot of what I worked on over the last, really, I guess the last 4 or 5 months is when that came together. Big shout out to Horse and the trading stable. When I was going down the order flow journey, I sought out people that are masters in that domain. And Horse is one of them. And I joined the stable, and I joined there with the intention of focusing on order flow. But what I actually left there with and what I gained from there was an appreciation for developing my own process and for building something that worked for me and that's specific to my trading style. And that's what I found there. Like I went and built from the ground up a set of conditions and rules and strategies that I like to trade and that work for me, and that has led to consistency and profitability over a longer stretch. And so it's all these components that, when added together, gets you to a place where you feel like you could just handle it as a business, right? Like that's what it really is. If you want to take trading seriously, you have to approach it as a business. You have to treat it with respect and as a professional, because it can yield a lifetime of returns and results if you treat it that way, right? Like if it's just a hobby for you, that's fine. Everyone has different amounts of time that they can dedicate to being in the charts each day and being in the market and trading each day. Well, I made up my mind 4 years ago or 5 years ago now that trading is what I wanted to do. But it's been the last 4 years of a journey to get to the place where it is real. I look at the last 4 years up until recently as my college tuition. I had success, but not the amount of success that I wanted, and it wasn't consistent the way that I wanted it to be. And that's all that I'm focused on now is, I have a new phrase that I like to go by, which is process, patience, execution. And those are the three core elements that have given me what I've been looking for out of trading. Okay, I'm going to pull up a screen real quick. Just got a little outline of what we'll go over today. We're going to keep this one not brief, but shorter than some future streams might be, although we'll figure out what the optimal length is over time as we get into this new live stream series. So we're here for Rapture's Scalp and Swing sessions, live perps trading and analysis. There's the tagline: process, patience, execution, right? Now, over the course of this new series, there will be sessions that will be live trading. There will be other sessions that will be just analysis. I'm figuring out the format and of how I'll approach that. Probably have two different types of shows. We'll bring back some of the requests as we used to do. That was a big draw for everyone back in the day, was I would host the live stream request shows, right? Astrology for Men, the old series. Well, I've sort of grown up from then, even though it's only been a little over a year since I was doing that series. But as a trader, I've developed and grown a lot since then, and in life as well. And I just want to reflect a more professional attitude towards it. Yes, Astrology for Men is funny and it makes sense, right? Like price charts are just our version or men's version of astrology, right? But I wanted to approach this from just, the things you tell yourself and the way that you view yourself and believe in yourself reflect in your results. So, greetings and salutations. Hey, Rap, what you been up to? Well, we've gone into that, right? It's been a long year. Early in the year was rough, but where I've been over the last 6 to 8 months, and now really in the last 4 months, when I've put on the polishing touches to the process and approach that I use, things are great. Things are really great. And I'm really happy to be back to do these live streams again. I debated whether I was going to turn to the live streams. I just wasn't sure, because when I was doing them before, it takes a lot of effort and energy and mental capital to be able to do it. And at the time when I was focused on trenching, it was taking like a 3-hour window. Even if the stream would be 1 hour, 1.5 hours, there's like the pre-show, and then afterwards, after the show, like mentally, I'd just be so drained that it would take me another hour or so to recalibrate myself to get back into the group chats, into the trenches, that it was taking me away from that a lot. And it was conflicting with my, with what I wanted to get out of the market. But now with Perps, where everything's a lot more planned out and a lot more patience involved. There's that word again, patience, right? And planned out is part of the process. That I think I'm excited to do these streams again. I had several people reach out and be like, yo, are you going to do those streams again? Like, I think you should fire them up. I think the market needs something like what you used to do. Shout out to my boy Fubius. Appreciate you, homie. and everyone that supported me along the journey. I appreciate all of you and everyone that's joining us here live and that will watch this on the replay, on the recording. So that's what I've been up to. I've also built a few things specific to helping my trading and the type of setups that I like. I'm a huge SFP trader, swing failure pattern, right? That's what an SFP is. Those are my setups all day long, my bread and butter. It's what I live for, is an SFP. And we'll get into that more throughout the streams and how I approach them. But I built a suite of tools that help me find and trade those more effectively, because it's one thing that I've realized is I tried to have too many different types of trades I was looking for because I didn't have enough of a process built already. And I was just kind of hopping from strategy to strategy to figure that out. Well, what I've done over the last half year is really just went, okay, SFPs happen all day long across any asset, any market, and I know how to trade the reactions of those. I'm just going to focus on that and cut out every other type of setup and just make that my career. And I found the most success in doing that because I know how to trade them. It's a set of conditions and reactions that I'm looking for that tell me to take the trade. And we will dig into that deeper in the future and how I trade those. But for now, today, we're going to have a more focus on high time frame charts. We'll review BTC, perhaps ETH and SOL from a high time frame approach. We'll look at market structure. What is your bias? Mark out our high time frame trading range and levels, some supply and demand. We'll also review the questionnaire that I put out the other week when I was trying to tailor what we would focus on in these streams, figuring out where everyone is at in their trading journey, where their strengths are, what they might be stuck on. So we'll take a look at that. And then if we have time or if there's any requests that come in, we'll take a look at a couple chart requests as well. Okay. So let us move along. Here is the BTC USDT P pair. Get rid of those alerts. This is the Binance BTC Perps chart. What we'll do, so this is, an area that I had outlined, shared on here on X actually, and in Telegram, that I'm looking for a higher low to form. And that actually, we're getting a pretty decent reaction here right now, but that's not very useful to you guys. It's just me just showing you a chart. What we're going to do is we're going to actually walk through and take a look at marking these things out. High time frame. Like from here, my bias is it's long. We've been ranging for solid month and a half, almost 2 months now. But there's some things that took place here that told me that this is probably going to be a higher low, right? And this is a version of a pattern that I'm looking for. We don't know what it's going to look like yet, but pretty promising here at the moment, to be honest. Okay. Let's just wipe this all clean. Poof, gone. You know what? You should never be afraid to wipe your charts clean. In fact, I recommend it from time to time because you can get stuck in your bias sometimes, right? You can be looking, you can have your levels up there for too long that you could just get stuck with a particular bias. I'm going to remove my little face thing here so we can get a full clean view of the chart. There we go. Even if your read is correct, it's good to wipe them from time to time just so that you can see things fresh and make sure that you're not clouding your judgment because you've held the view for too long. So what I like to do, I like to start on monthly. Pretty solid looking chart on monthly, if you ask me. And what I do for monthly is I look for monthly closes of significance, right? So like an all-time high monthly close, a monthly low close that created that move, right? It's interesting. On that October 10th flush, where did we land exactly? Right? All you needed was that one line. Another monthly level there. And then I get an approximate mid-range. And that looks decent there. Then I'll go to weekly. I like to mark out weeklies with range quarters. I do it in a couple ways. Like sometimes I'll do, if we're trading as an inside week, which is something, a technique that I learned from Flow Horse, Ryan, over at the trading stable. Again, shout out to Ryan. I'll mark out the week that we've been trading within with range quarters. And you can see how those quarter levels are quite important. There's no particular reason why the range quarters should matter. They just do, right? So if it works, I fucking do it. And then I also see this is our primary weekly range, right? This is swing high to swing low. It's a bearish weekly range. Well, I like to mark out those as well, just so that, and then you can see some of the other range quarter levels become important. We can also mark out where an area of weekly supply might be, although it's so far away that I don't think it's overly important right now, but we'll do that. We'll just pop up, put our area of supply, just so that, right, what do we use supply and demand for? It's just as target zones. Even if the boxes or areas might be large, it's just as a target zone. It's where you're telling yourself mentally, okay, we're into an area where I want to be focusing to look for the next layer of a setup, right? Also, shout out TraderMan. Like the primary analysis that I do, the primary type of analysis I do is largely influenced from the homie TraderMan. What else do I see here? Okay, on weekly, I see we've got a potential weekly SFP taking place right here. Right, and I'm a big fan of using templates just to save time, to speed up my workflow. I use templates for different things. It makes my life easier. Okay, so we've got our weekly range marked out in quarters, got the monthly levels, inside week, range quarters marked out, weekly supply, a weekly swing level that is possibly putting in a weekly SFP. Historically speaking, weekly SFPs, not great, right? Weekly SFP. Well, not great if it's a bearish SFP or really great if it's a bullish SFP. But you know what's a better way to frame trading in the chart? Eliminate that bullish or bias. It's just you want to trade it both ways. You're looking for longs at range lows and shorts at range highs. It's really as simple as that. But I mean, we can go back as far. And weekly SFPs are some of the most actionable signals in crypto, right? Like look how many times weekly SFPs have led to a pronounced move, right? Like this was one where, yes, you did get an initial reaction, but it ended up failing. So they're not always, it's not 100% hit rate, but overall, anytime you're getting a weekly SFP, right? What's an SFP? It's a swing failure pattern, right? That's when you have a swing level that price attempts to close through, but then closes back below the range high or the swing high, right? Right. So price tries to violate the level by trading either below or above, but then it fails that swing level, right? So those are just some of the weekly SFPs on the BTC chart. And we can go back all the way to the beginning, and 9 times out of the 10, they are actionable to take the trade in the direction of the SFP. So if it's a bearish SFP, you're looking for shorts. Trader Assail, what's up, buddy? Thank you for joining in. Yeah, Main was the biggest unlock component for me back in 2022. Like there's several traders that have been milestone unlocks in my journey. The first being Big Cheds, where I went from viewing the chart as like a bunch of squiggly, all over the place price action to just viewing horizontals. And as soon as I viewed the chart in horizontals, that was boom. It was like, okay, I can see where these ranges are. And then from there, learning deeper from Trader Main about how to mark out ranges and how to get my bias and define the market structure, which was really one of the last components from a few years back. How long have I been trading? I don't know if you mentioned at the start. I didn't mention, well, we've kind of talked about it. So I back in 2021, peak bull market, buying random shit coins that we think is going to make us trillionaires, right? And getting lucky, tossing money into things, buying things that are being shilled. I had no trading experience. Then we got the massive mid-cycle or mid to late cycle flush, May 21, where everything went down like crazy. And early in your crypto journey, it's all about that hodl. And if you don't hold, you're never going to make it, right? Not going to make it. Like, we just hold the line, like buy the dip, whatever. And that whole experience was fairly brutal, but the market did rip back up. And I was like, see, I'm a genius. I just held. I trial by fire. I've passed the crypto test. I held, and we're back up. But as we all know, that just led to a double top. And end of 2021, we got a massive correction through to mid 2022 until late 2022 with the FTX drama, right? So when I really started taking trading seriously was early 2022, when I decided for myself, I see guys that are crushing it. I see guys that understand how to trade and read a chart. I want to do that too. So I started the trading journey then. Was I good at it then? No, there was a lot of luck involved. I did capitalize on some opportunities and got good or decent at shorting, but I was shorting in a bear market, right? It's the same thing as being a bull in a bull market. Well, being a bear in a bear market, you appear like a genius, but that's only part of the battle. You need to understand trading ranges and when things shift from a range to a trend. But my trading journey began back in 2022, but it was a solid 22, 23. So in 2023, mid 2023, I thought I was better than I was. But I took my read on price and applied that to on-chain, and the skills that I had developed applied really well. And I kind of became known as the on-chain TA guy. Like, I don't like the phrase TA. I find it just so grifty. But I was known as like the on-chain TA guy. I would chart any shitcoin with a pulse. I have developed techniques since then that are a lot better for on-chain, that if anyone is still trading or wants to learn some solid techniques for trading on-chain, like when to know when the initial big run-up is over, when you should exit, or after a deep pullback, when is the proper time to get back on board so that you're not FOMOing into it or feeling like you might miss something, or getting in too early and then finding that you're down another 50%. So there are techniques that I developed that are really great for that. And a buddy of mine, Sonder, who did a training boot camp with me over 4 weeks. That's some stuff that we worked on and looked at. And shout out to Sonder. And I do appreciate you, buddy, for taking that journey with me. And we can get into that more onto that stuff later, but we'll get back to what we're doing here. So weekly SFP. Next, I'll drill down to daily, see what we're working with. And what I like to do is mark out my primary trading range based on market structure and our bias. So I go through looking for levels to see this is our swing high on daily. Making this our swing low here. Now, why is this the primary trading range on daily? Why is that our swing high, swing low? Well, we were in a downtrend, lower lows, lower highs, lower lows. This right here, even though it may not seem like it's overly significant, this was your swing high of a bearish range. Well, then you got to close above. Right? And I'm very strict with how I mark out ranges. And how to qualify market structure is by a higher high or lower low close to define a bullish or bearish market structure. All right, so this was the level that got closed above. Then you made your new trading range. This was the swing low that created the swing high, creating the higher high close above there. Even though, yes, it's been still just ranging, it's starting to range with an upward, slight upward bias once we made the higher high here. So that's our primary daily trading range, right? These purple lines here, that was our market structure break level. Next, what I like to do is highlight some other important levels as price goes along, right? Like this was an important level. All right, and I use different thickness for the primary trading range versus internal swing levels and stuff like that, just so that it doesn't get too muddy. But one thing that I did see the other day, or should I say the other week, was after this SFP here, this daily SFP here. Yes, it went chop for a while, but we had a market structure shift when you got to close above there, which created this box here, this breaker here, which is the box that I had outlined before. And this is why this is the region that I pointed out is where I'm looking for the next one. You got a daily SFP with a market structure shift higher high above. That's the area I'm looking for the next long. And as of right now, that squiggly that I drew is playing out a bit. So next what I do is I'll go down to H12, start marking out some other levels that have been important, right? Like we can see there. Okay, well, that level's been important. But what I do is as price is unfolding, I mark these out as things happen, right? Like as swing levels occur, I'm on the chart marking them out. And what's a swing pattern? It's a 3 candle pattern. For a swing low, it's a high, low, high, wicks included being the lowest point of that swing point, right? High, low, high, there's a swing low. Here, this was a swing high because you had a low, a high, a low. It's a 3 candle pattern, right? Those are the things that I look for to outline because once price gets to those levels, that's the area where I'm looking for the reaction and interaction to occur to know whether I'm trying to get on board that trade or not. And I'll just look around and see if there's any other, like this may become relevant, but as of right now, it's not. We could mark it out, but it's a little bit further away from the trading range, but we'll mark it out regardless. All right. Let's line all these up. I used to like to keep my charts clean with only the closest proximity relevant levels, but as I've developed the strategy and system that I use for trading now, I don't like to have to, when price gets somewhere, have to guess or go back and start filling in levels. I like when price gets there, I'm ready to take a trade, especially since I'm intraday and getting my entries on low time frame, like super low time frame these days, that I don't want price to be getting somewhere, then me going, well, why are we getting a reaction here? Or for price to get somewhere and it's some sort of price action starts to take place that makes you feel FOMO, like, oh shit, I got to get in this move now. Well, no, I wait for levels to hit. And once you get a solid read on your levels, you go down to H4. Once you have a solid read on levels, it makes your life a whole lot easier. Because then you're patient and able to respond in a reactionary manner rather than scrambling to figure things out. I like to set my spots and then monitor price in real time. Like when I'm trading during my sessions, when I'm at my desk, I'm focused on trading, but it doesn't mean that I'm just taking trades all day long. I'm waiting for certain areas to hit, right? Like, why do I mark out these levels? Look at that. There was an H4, and this was the yesterday when I posted here on X and in the Telegram. What I said and how we got on board that long yesterday was this SFP here, right? Up until here, right? I had outlined where was my orange squiggly in this box. I was like, I'm looking for a long here. Well, when I went to bed that night, 2 nights ago, I said, okay, we're coming down to the box. We'll see what it looks like in the morning. But as of yet, no trade for me yet. Then yesterday morning, we got that SFP there. Now I'm on lower time frame so that once price gets down into here, I'm looking immediately because I have the level marked out to see if I'm starting to get low time frame price action to get me on board the trade. But this was that SFP here, right? This is why I'm marking out levels. And we can see here, okay, possible H4 SFP. It's about to close in 12 minutes. If I was trading right now and I had my trading set, like, you guys will be very possibly surprised to see what my current setup looks like when I'm trading. I use a 6-panel, 6 time frame chart so that I'm monitoring different things at all times, so that when price gets into a level, I'm not having to flip between time frame like I'm doing here as I'm analyzing right now. When I do my high time frame stuff, yes, I use one chart and I just go through and do that. But then when I'm actively trading, like here, I'll pop it up. It's not going to look great here because this is off my laptop monitor and my main monitor is much larger so that I can see everything going on. But like, this is my main battle station. And I've got, well, this is usually daily or H12. Not usually. This will always be a daily or H12. I'll just switch between them. And H1. And these are sort of, I've used them sort of paired, right? Like the fractals. I love fractals and I like a high time frame, low time frame approach. Well, daily or H12 plus H1, H4, and M15. And here in the middle, M5 and M1, the 1 minute and 5 minute, which are my execution time frames, right? And we can see here on M1, like things that I look for. We're not going to dive into this too deep right now because this is going to be a whole other show in itself. And once we start doing the live trading streams, we'll get more into that. But here, as we got into that H4 level, which I already had marked out, right? Like, yes, we just drew it because I cleared the chart, but it was already drawn there before. Well, you got an H1, or sorry, an M1 SFP into the H4 level with an M1 breaker right there and a close below, right? That's a short trigger for me. And that's how low time frame I'm looking for execution these days, like M1, M5. But I'm doing my analysis on high time frame. High time frame levels, to me, are the most important aspect. I don't really care about an H1 or an hourly level. I don't draw them out by hand. Actually, I use some indicators that do that for me that will highlight SFPs as they occur on different time frames on my chart automatically so that I can save myself time, right? Like this whole approach that I have here, and I'll share this stuff in future streams. I'm not going to show everything right now because it's not going to be useful to you right now. But everything that I've done to build my layout here and my approach and process is to save me from having to think too much in the moment. I just want to react to price and take the trades. And I don't want to be having to do a bunch of other secondary things before I can actually take the trade, right? Like the trading part, the actual bidding, the buying or selling, taking the trade, opening the position requires your focus in that moment. So having to like go through and then, right? Like I don't want to have to do that. I just want to be able to look and say, okay, that was what I was looking for. That was the interaction at price that I was looking for. Anyways, back to over here. We were on H4. So we're seeing that we're getting SFPs there. I think for now, that might be about where I would leave things in terms of levels. Like I could probably draw that. Like I said, I like to have them pre-mapped so that when it comes time to it, I can respond and react there rather than have to do a zoom out and say, okay, why is price? Oh, well, we have a level there. We have a level there, right? I want them on my chart ahead of time so that I can make my job as easy as possible. Anyway, so BTC, that's pretty much, this is where we were before we started the stream. This is how my chart was marked. This is a breaker, and we'll get deeper into those for future streams about how you recognize them and how you outline them and what conditions you're looking for to recognize them. But that is a daily bullish breaker. You got a daily SFP and then the market structure shift there. So this is a daily bullish breaker. We're looking for a higher low here. All right. I'm just going to, no, we can leave everything up because I pretty much outlined exactly how it was before. Like I've done this so much and for so many hours and know what I look for that I see the same thing generally every time, even though I did mention earlier, like it's good to wipe your charts clean and see what you see. Well, I see the same things when I see them, right? And like we had this daily SFP here that I outlined in the TG a few days back that we were looking for short. Well, we're down here. If this, then that. So we've had an if this, H for SFP, then that, we got the long. Well, maybe a next short is coming. Like I showed you on the lower time frames, I've already entered a position here based on the interaction, but that's low time frame, right? Like that's a scalp until it turns into something further. And yeah, I think we'll leave it at that on Bitcoin. Where are we at? We're almost at an hour. Well, what would you guys prefer, ETH or Sol? We'll do one more of these, and then we'll take a look at the questionnaire answers so that we can build a plan and a strategy for the live streams moving forward. I plan on making the live streams once a week, at least for an analysis approach, and then maybe a second stream per week for live trading, or maybe the live trading will become more frequent during certain hours or certain sessions, right? Like we've got the New York session, New York Open. But I'll be honest, I wake up super fucking early. Like I get up at like 6:30 in the morning and ready to start my day around 7 a.m. Eastern time. So, depending on where you are, that's going to be different times. Obviously, that's how time zones work. But I'm up super early. I'm ready to trade. But I'm prepared to trade all day long. I mean, the beauty of going with the approach that I use with the key levels on certain time frames, like H12, H4 daily levels, is it's not specific to a time when it occurs, right? Like I know some people that are just, I only trade the New York Open, or I only trade. I know certain times of day and windows where my performance is less positive EV, where my trades don't work out as well, or maybe it's after I've already been at my desk for many hours, I'm tired or whatnot. And that, is all part of conditions that I built for myself to say, maybe I don't trade in during these windows. And so then I log out of my trading accounts and do something else, go for a nice long walk. I'm a big fan of long power walks, like solid, get your 10K step on in one outing type walks. Or maybe I'll just relax a little bit, right? Like you need to create the conditions that are allowing you to be at your optimum while you're trading. Okay, let's take a look at Solana since it's been performing a little bit better recently, and we can do the same thing. Let's just wipe this thing clean. Just remove them. Let's go to monthly. And I'll do the same thing, right? Look for areas that I see of relevance. You can see that monthly high close, right? Like for monthly, it's not as precise as I'm doing with my ranges on daily and H12 and stuff like that. For monthly, I'm looking for close or swing levels that have provided significant importance in the past, right? And we can see here with that last cycle all-time high close for Solana, that this just looks like a massive deviation, right? And how important that level is. Well, we're just trading in this range, right? Like chippity chop, 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 deviate above, deviate the low, right? So this is just how I start my time frame to start marking things out. Go to weekly, we can do the same thing, right? Pull up fibs, and I have my fib set up to range quarters, right? What does that mean? It just means you've got quarter markings on a range defined. And have we had it? No, I believe this closed. Oh, no, it looks like it was. This has all just been an inside week to here, same as on Bitcoin, right? So we'll mark out the range quarters on there. We can go to daily. Had been underperforming dramatically. Now starting to outperform a little bit, right? After it got that SFP on the weekly, right? I can show you here. This was a big SFP on weekly. And I was mentioning those tools that I built. Well, they're all about finding and alerting me to SFP so I don't have to monitor every chart. And we'll talk about that in the future. I ran a boot camp with some lads specifically around that process. It's a great experience. And I do intend to run some of them again in the future with the indicators. That's not why we're here today. So that, that was your weekly SFP. And after that took place, you actually got daily breaker, market structure break, flip the breaker, retagged it, right? How we outlined on BTC that daily breaker. Well, this is a version of it on Solana, where you actually got a market structure break and not just a market structure shift. Tag the breaker, right? Go mark out some key levels. Now you can see, even though price closed above that level, you can see after the fact how it interacts with it, right? But I just want to see key levels. Let's get our actual daily trading range. This was your swing low. And your swing high is here. So that's your daily trading range. It's a bullish trading range on Solana. Came into the breaker. Next we can pop down to H12, see what we see. Start marking out some lines. Oops. All right, and like this is why marking them out is important. H12 SFP gives that bullish reaction within the daily breaker, which is a zone, right? We mark out the boxes so that getting alerts here for H4 SFPs on BTC and ETH. We just got H4 SFPs that closed, right? That level we were looking at on BTC when we were marking it out was a bearish SFP. Well, it just confirmed. How do I get these? Well, these alerts are from that suite of tools that I built. That just makes my life easier, right? So why do we mark out old levels that I think are going to be relevant? Well, there was an H12 level there, SFP'd, right? That led to a good reaction. And when you get there, you're drilling down into lower time frames to see how can you get on board. Oh, and look at this. Here was our H1 breaker. Where did it retag? Boom, right? With an SFP going into it. We're good. I keep saying this, but we'll dive into this stuff more in future streams. We're not here to look on low time frames today and all that because that's going to take at least one stream in of itself of teaching that type of stuff. But those are the type of things that I'm looking for. H12 SFP. So Solana is bullish. Is this maybe going to give us another pullback, especially given that BTC just put in an H4 SFP? We shall see, right? And people that have been with me for a while in the Telegram know how much I emphasize an H4 SFP, how much I emphasize just go through and mark out your H4 levels as they happen, right? Like, look here. Even with that H12 SFP, you got an H4 SFP that took place there, right? You just mark out these levels so that when price gets there, you're ready to act and not think. I think that is one of the tougher parts about trading is rather than being ready to respond to a level, you have to think through if you don't have it marked out already, you have to think through why it's responding at a level or what is there. You have to go through and say, okay, what am I seeing? And then you do that. And then by the time you do that, if you're trying to get a tight entry, and I'm big on that, like I really worked on refining my entries because I realized that I fucking hate being in drawdown. And if I can get a tighter entry built around a system and process that is proven effective, that has given me consistency, why wouldn't I? So I don't want to be having to mark out the levels as price is getting there. I want to have them ahead of time, right? So we've got some levels there. And probably even mark out this one here. Now you might be asking, well, if the level is already taken out, if it's no longer an untapped level, are they still relevant? For me, yes, because I see all day long how often levels are getting reactions, right? Like we could even say that this level is probably a version of this level here, right? But as price develops and unfolds, I go through and I delete things just because I don't want a chart to look fucking horrible or clouded. I like to be able to see price as the primary thing that I'm monitoring. So Solana. It's definitely stronger than BTC right now. We've had that reaction here. I wouldn't be surprised, though, to see it come down right as we had this H12 here. I wouldn't be surprised to see it maybe come back down again. But I think you're looking for a next long if that's the case. I just think this is going to be significant to get through. And we're seeing this interaction at this level take place. I think any further dips down into here with price action that supports that would be the next long. And what the fuck, let's just do ETH real quick as well. And then we'll dive into the questionnaire and we'll get through that pretty quickly because we're not going to dig into the solutions or answers that I have from the questionnaire. We're just going to look at it and talk about it briefly, and then I'll build a plan for streams moving forward. This was really just a reintroduction. Also, if anybody has a request or two, feel free to drop it into the chat and I'll look at them before we close out. Okay, ETH. So same thing, I'll do the same thing here. Let's just wipe this out. All right, like don't be afraid. Where is it? Don't be afraid to delete things off your chart and start fresh. So here we are on monthly. Well, clearly a massive range on monthly, right? Like this is the primary trading range. It deviated below, recaptured, tagged it again, went to the top, then we came to the top, took out the range highs with an SFP up there on monthly. Like the higher the time frame, the stronger the signal and the more significant the signal. So monthly SFPs, which we also had on BTC. Like everyone's been confused. Like, why did we go down so much on BTC? Well, we fucking SFP'd all-time highs on the highest time frame. You can't fight. You can't fight that. Okay, so there's our primary ETH trading range. Might even say this is your midpoint, right? And then how I'm using monthly levels like that is I'm just looking for using my eye to see where the most interactions took place. It's not as precise. The lower time frames is where you get more precise. The high time frame is just as a guide. Go to weekly. We'll do the same thing. All right, here's that bearish weekly range. There's our range quarters. We've still been trading this weekly candle, even though it got above. This is all inside weeks, meaning price after this week formed has opened and closed within this week. It's all been one giant inside week for 1, 2, 3, 4, 5, 6, going on 7 weeks now. That's almost 2 months of trade. Like, remember when we had that October 10th flush and people were like, oh, are we just going to start to go up from here? Well, moves like that take a lot of fucking time. And I don't know. I think maybe this still resolves lower. At the very least, to come take out these lows, right? I don't know. I don't know that the bottom is in yet, but I don't like to live in that sphere of trading. Like I've shown, I'm intraday. I can get you your high time frame swings when they take place, and I'm using those levels, the high time frame levels. That's crucial. I will continue to emphasize this for everyone that's watching and to anyone that learns from me. Your high time frame levels are gospel. Out of anything in trading over the 4 or 5 years that I've been in markets now trading, I haven't come across anything as reliable as marking out your high time frame levels. Okay, so there's weekly, and also what do we see here, right? Like we keep SFPing this weekly level here. That's probably not great, right? Look at what happened the last time weekly SFP'd. Went back down to the lows. Well, we're doing something similar here now, also on BTC, right? Not ideal. I am still leaning bullish on overall because I think another pop up, especially on BTC, well, and as we saw in Sol, but that doesn't mean that it has to happen, right? It's if this then that. I don't like to be dogmatic about my view. I like to respond to price and to what it's telling me and not get pigeonholed into having a bias. Which is why you'll never see me on the timeline being the loudest bull or the gayest bear, right? Like I'm just not that guy. And which probably hinders my account growth in terms of follows and whatnot. But I like to be true to how it is that I'm trading and not sell a dream or lies, but to give, right? It's that whole teach a man to fish thing, right? Like I'd rather you learn how to trade for yourself by doing your own analysis and learning how to read price and taking the trades as they come and not having a pre-outlined version of what you need things to be. You just need to respond to the levels. Okay, so let's mark out some levels on ETH. I'm just trying to find my market structure, right? Like that was a lower low. Well, we've had a higher high here, right? So that was a market structure break. When you got to close above that. Why? Because this was a bearish range, then you got to close above, making it a bullish range. You can probably adjust this line to here now. This is your range low of your bullish range on ETH. That's your range low on daily. Oops, didn't want to do that. This is your daily range high on ETH. This is your bullish range on ETH. We even have our demand zone, right? Our order block style demand zone. There's different ways of outlining supply and demand. Well, that is an order block style demand. And where did price land and bounce from on daily? Right there, also holding that weekly range quarter level, right? See how these levels all come into play in the future? We also had this level here as a significant swing level at one point, and look at that. Look at where it came back and tagged, right? That's why we're marking these levels that we think will be relevant to price in the near term. It doesn't even have to be that near term, right? Because on BTC, the level that we SFP'd here was outlined on December 3rd. Well, the 4th, actually, once you got that close and you knew that that was your swing high. But over a month ago, right? So mark out your high time frame levels. Be consistent with it and do it with a purpose. Do it with intention. Be prepared in the market rather than playing catch up. There's nothing like it's for me at least. I don't like to have to feel rushed in the moment. I like to be prepared. Call it the old man in me, right? Like I'm in my fucking 40s. I got kids. Like I need as much time saving as I possibly can get. And yes, when you're looking at this, you're like, well, that's a lot of levels you're putting up there. Like I keep emphasizing, I want to be fucking ready when price gets there. I don't want to be caught with my dick in my hand trying to figure out what's going on. Right? This may become relevant. Who knows? Like, I don't know where price is going to go. And I don't like to presume that I do outside of level to level when I get a reaction. If I would love it if we got an H12 SFP here within this daily demand. But ETH is looking strong, actually, at the moment. All coins are doing okay right now, right? We've gone on H4, but then we also see, okay, we've been doing this here. Maybe it makes me a little less bullish, right? But see how important these H4 SFPs are? Look at this, right? I'm not telling you have to go and mark out every single level, but develop a process that gives you options so that when price gets somewhere, you're not scrambling. I keep saying that, and I'm going to keep emphasizing that because that has been one of the keys to my consistency. Okay, but overall on BTC, ETH, and SOL, I lean bullish. We're just waiting now for the next trade. Like the next trade right now might be an intraday short from here, right? Like SFPing there. BTC also SFP'd there. And yes, this candle came back up into it, but how do swing levels form, right? Like look at the way that price happens on swing levels, right? You get the middle, the highest, well then the next candle usually pushes up a bit into it before. Now, who knows? I haven't been focused on low time frames right now. I'm trying to focus on this high time frame stuff with you guys because that's all it's all foundation. Without this foundational aspect, none of what I do will make sense to you. This is looking solid, but once it gets back into that level, I would be watching for what price does there. Okay. I think we'll leave the charts there for now, right? Orange squiggly possibly playing out. Once we get today's daily candle close, if we get a swing here, I'll mark that out. Then next would be the next level I mark out on BTC. I wait for the closes though, right? Because until it closes, oh, so, this got a bit muddy because as I was marking things out, I wasn't adjusting so that it's only shown on that time frame. And that is important as well because you don't want to be looking at daily and be like, oh, it's a lot of levels all over the place. You want it to be a little bit cleaner. Right, but we've arrived at pretty much the same charts that I had before. We've arrived pretty much at the same charts, same levels that I had before. And that just comes with time and experience and knowing where and what you're looking for. Okay. Let's pull up the questionnaire. We'll go through that quickly, just as a walkthrough, and then we'll wrap things up. I don't see any requests today. X is telling me I've got 115 viewers at the morning, but the way that the algo works, are those people watching intently? Probably not, but that's okay. Today is day one. This is relaunch and rebuilding. And as I mentioned before, the recording will be posted to YouTube once done, since the live stream didn't get approved in time. Our YouTube, Google. But that's my bad. I didn't inquire early enough about what needed to take place. Like when I used to do the live streams, it was branded through the Daily Edge. We had the Daily Edge YouTube channel, and that was all ready, done. So when I went to fire up a test stream yesterday, and fortunately I did, and I found that out so that I wasn't scrambling last minute, right? Like I keep talking about how I like to be prepared and ahead of time. Well, I could have been more prepared for the YouTube front for the stream, but at least I checked with enough time so that I could mentally figure out what I would do in the event that it didn't unlock in time. Right? Got to keep things moving. I'm not going to let something like that derail. Okay. So here was the questionnaire, and thank you for everyone that answered. I posted it last week before announcing the return of the live streams, at least on X. I was teasing them a bit in the Telegram. Excuse me. Right? Want to gain a better understanding of where you guys are in your trading journey and abilities. So I ran the polls. When you open a clean chart, can you determine what your high time frame bias is within 30 seconds of looking at it? And pretty solid amount of you said yes. And that's impressive, because that's half the battle, right? If you can determine your high time frame bias, everything is trickled down from there, right? Are you biased for longs or are you biased for shorts? And that's really where the battle is won or lost, because if you're fighting against the trend, you have to understand that the probabilities are less in your favor. Now, I trade counter trend all the time, and as I mentioned, I'm looking to get bullish at range lows, or looking for reasons to get long at range lows, and looking for reasons to get short at range highs, and in between, depending on interactions with levels. And I trade those all day long. But understanding your bias can give you a better understanding of the length of hold that your trade might be, whether it's just a scalp or a swing. And we looked at market structure a little bit, but for the 30% of you or so that says no, you can't do that, or what does high time frame bias mean? Well, high time frame bias is just, what is your market structure? Are we dealing with a chart that is making higher highs and higher lows, giving it bullish market structure? Or is it printing lower highs and lower lows and lower highs and lower lows, giving it bearish structure? Or is it just range bound and chop going sideways, right? Like a market can only trade three ways. It can either go up, it can go down, or it can go sideways. And you want to be trading with the conditions or the environment that the high time frame is providing. So I don't think we'll have to spend too much time on bias in streams. But basically, how I went through top down on BTC, ETH, and SOL just now, that was how I determined my bias, right? Like when I was saying, well, this was our market structure break, and this was our higher high, right? Next question was, if I ask you to outline your primary trading range, are you confident in your levels or mostly guessing? 50% said confident. That's great, because understanding your trading range after your bias is determined is going to prevent you from FOMO longing into range highs or hitting the short aggressively at range lows, right? Like you want to be operating in the top or bottom third of the range to align with bias, right? For the largest portion of the trade to be captured. Until you break market structure, it's either direction. So 37, almost 40% said mostly guessing. Okay. So we'll have to spend a little bit more time with that. And to the 11% that said, I don't really draw lines, I'm curious if that's just because you don't trade that way or you don't know how. But we'll dive into that more in future streams. Like I'll probably do a whole, like, part of the series will just be educational focused. Do you know how to mark out swing highs and lows, both range extreme and internal range levels? Pretty solid amount of you said yes. About 30% said no. Now, what is curious for me is if, 50% of you are mostly guessing or don't draw lines, this doesn't match with that, at least in my mind, because without being confident in your trading range, then understanding swing highs and lows, yes, you can see them on the chart, but understanding which ones and why to outline becomes a little bit muddier. So I think we need to spend more time in ranges and which levels over other levels are important. When you trade, are you using a dual time frame approach, high time frame for setup, low time frame for execution, or just entering by feel? A lot of you said by feel, 35%. Now, yes, a larger portion said dual time frame, which is fantastic. But for the 35% that say by feel, I would imagine, or I would venture to bet that you end up in drawdown or underwater a lot, or you're FOMOing into positions, and you're finding that you're either dealing with drawdown a lot or getting stopped out or liquidated. That is something we're going to work to eliminate, because feel is not a fucking position. There's a process to trading and strategy to it, and we can do much better than feel. I personally, I'm a big believer and supporter of the dual time frame. I use, as I showed, my primary workspace is a 6 time frame approach. I'm not saying you need to go that extreme. I do think that 2 or 3 time frames is sufficient for most people. You get your highest time frame to frame your bias and give you your target areas. Your mid time frame, like an H4 or H12 or something like that, gives you some of those extra context levels. And then your lowest time frame is your execution. How are you getting on board the trade? What are the price action signals or set of conditions you're looking for to get on board the trade to tell you that the setup is realigned with your bias? So we will dig into this more, because this answer of feel, I don't want you to be approaching a trade off of a feeling. I want you to be approaching a trade from confidence, because you have a setup that is presenting that has a high hit rate or high probability, and where you're invalidated. That's another big thing, right? Like understanding where the trade is wrong. Are you more of a swing, intraday, or scalp trader? 62% said swing, about 35 intraday, and a very low portion for scalp, and that's fine. Like, scalping involves a lot of time and focus. What I will say is, what happens on high time frame, that same fractal plays out on low time frame, on any time frame, right? Price is just fractals, and you're looking for similar things. And what I like to do is, in swing setups, is looking for the fractal to realign on a scalp time frame to get myself really tight entries. And we will go into that during the live trading sessions in the future. And then finally, the last question that was in that poll: do you follow a process or have a set of conditions you need to see aligned before entering or exiting a trade? Just under 40% of you said yes, which is great. That's the biggest portion of what I worked on over the last year, and what has led to me having better success and consistency, where I'm not feeling, not that it was about guessing, but that I just didn't quite have those elements put together to build to have a strategy that plays out long term, even short term, right? Like my hit rate is quite high now, but it's because I'm waiting for conditions and have my charts and tools set up in a way that support that, so that I'm not guessing and I'm not having to do extra work in the moment, that I can just respond. Also, just under 40% said no. And you're probably some of the same people that said feel, right? And I was a part of that no bucket for having a process. For me, that was the most recent big unlock to my trading. As I mentioned earlier, when I joined the stable a few months back, I joined in search of learning about order flow and to learn from a master of order flow. But what I left the stable with was more about myself and developing my own process, because it became pretty apparent that the order flow stuff was becoming noise and extra work when I already had a solid read on price action and how to mark out my ranges. The different trading approaches just give you similar ways to arrive, or different ways to arrive at similar conclusions. And it just was overcomplicating it. But what I learned there and what I walked away from there with was how to be confident in my own process and my own approach, and to really make it a business and really make it a process that I adhere to. And the other people, I do, but emotions. We've all been there, right? That's part of trading. But that is something you have to get over. And for me, how I got over that was turning to lower time frames, so that I could be, well, first of all, to be taking more, executing on more trades, so I can continuously refine my entries and get a better understanding of how to handle the human element of everything. But everyone's going to have different reasons why that impacts them, the emotional component, the psychological component. But some of you are probably also answering because it was a funny response. But that's stuff that we'll work on. So I do think areas we'll really need to, areas we'll focus the most on is ranges, as well as this feel thing, right? The execution and a process. And it sounds to me, based off these answers, is a lot of you are where I was a year ago. And so the path that I took over the last year got me over those humps. And now you can utilize my experience to cut that time down, or at least recognize the areas that you can focus on to improve upon them. Okay, lads. Well, we're at almost an hour and a half. I wanted to keep it closer to an hour, so we're going to wrap up. No requests. I can see in the chat. We're going to need to start building out the audience, getting more people involved, and that will come. And I think once the YouTube live stream situation gets sorted today, the next stream will be simul streamed here on X and on YouTube. Usually I find YouTube gets a little bit more audience participation, and that's fine. We don't need to do any chart requests today, but have them for the future. Have them for future streams. Well, my friends, once again, I am Rapture. I dropped the 0x. I didn't want to be aligned with the community as my persona anymore, right? And 0x, what does that come from? That comes from the Ethereum wallet addresses, right? And contract addresses. And I didn't want to Like, I'm a grown ass fucking man. I don't need to be aligning with the community like that. I also don't want to have any um, emotional attachment to an asset. Not that I had an emotional attachment to ETH. I've long since sold my spot ETH. Actions for today. Well, if you can, like, subscribe, and comment. The YouTube channel is live. It's youtube.com/nighttherapture. I'll post links for that as well. It's attached to some of the posts that I put out. But like and share here on X. It helps with the reach. It helps me to grow the show. I want to make this consistent, and I want to build up a rapport with you guys and get everyone into a place with their trading that they're feeling confident. And we're all at different stages of the journey. And I'm at a stage now where things have been going really well, and I feel really dialed in and confident in what I'm doing. And I would like to be able to bring some of you along with me on that journey. Like my buddy JJ in the chat. He's one of my longer friends in the space and was a day one ride or die homie from my old live stream series. So thank you for being here, JJ, and everyone that joined. Once again, I am Rapture. This has been Scalp and Swing Sessions, live perps trading and analysis. Again, future streams will focus on the live trading component. Today was more on getting reacquainted and doing some high time frame stuff, but I've got lots planned. I'm really excited to be back. And I thank you all for being here on this journey with me. And on that, this is Rapture signing out. Ciao.